What's up, everyone? It's Karthik with MoneyVest. So Tesla having an incredible day, up a little bit over 7% here, pushing up to over $243 per share. It's the first time it's actually hitting these levels since July of 2024. So since the earlier this year, we were trading well over 260, upwards of $270. Tesla has seen a very nice upwards momentum coming in since August 5th. So literally the carry trade blow up and volatility getting up to over 65. Tesla was trading down to $181. It is now pushed up over 34% from those levels, hitting its highest level since July of 2023. We're still in the context of a little bit of a downtrend. However, making some significant progress on a shift in the overall trend ahead of the Robotaxi event on 10/10. So I got lots to discuss in this video. I'll give you guys an entire update on where we are with the Tesla in this cycle, because I did this video 3 weeks ago. So I talked about this 3 weeks ago, that finally a big breakout is coming for Tesla. And I consider yesterday's move as a beginning of a huge breakout, because we actually broke out of a huge area of resistance. So if you come over to my chart here that I pointed out in my previous updates, you'll notice that we were kind of battling around this area of supply at $235 to as much as $240. So for the longest time, and for the longest I mean well over 2 months, 3 months, we've been kind of struggling to break out above this level for some time here. So this right here, rejection. Over here, rejection. And this was the third and the final time they were kind of touching up to that level. And of course, yesterday with a huge green candle coming in over 7.3% was a breakout for Tesla. And the next target that I'm putting on for Tesla here, especially for the next couple months here, especially when we go into the Robotaxi event, is going to be 270. That's the level that I'm targeting now moving forward for Tesla. And this was a video, 15-minute video. Definitely do check out, because I do expect $400 is very possible. May not be for the end of this year, but I think it is possible with the momentum that we're getting with the Robotaxi event, with the unveiling of the new 12.5 FSD, Robotaxis, and of course, there's a lot of partnerships in place here. What is Tesla going to do with the Robotaxis? They're most likely going to be launching at a very, very small scale in a metropolitan city, and then of course, scaling from there. Are they going to go their own route, direct to consumer, or are they going to partner with Uber or Waymo to kind of offer Robotaxis and FSD features? So there's a lot on the line. We also got the humanoid robots, and the electric vehicle business continues to grow really well. So there's a lot on the line, but interest rates coming down is also a huge tailwind for Tesla with a lower priced model. So there's lots to discuss, we can spend hours here talking about Tesla's business, but definitely do check out that video, because I do talk a lot about that in detail, and more specifically talking about how Tesla goes through these cycles of where it doesn't do anything for years, because it is, at the end of the day, it is a discretionary business. Car purchase, phone purchase, Apple and Tesla are very discretionary purchases. You only do that when you are in a very good position to finance those cars and those phones, because they're getting more expensive. And at the same time, you are, you're looking for an upgrade, and you're looking for new technology, newer products, newer vehicles, with more features, more capabilities, right? And with Tesla, and again, I would put Apple and Tesla kind of in the same bucket, because both of these companies are at the cutting edge when it comes to technology for phones and for vehicles. And again, their marketing is on point. For Tesla, you can make a case that they don't really spend a lot on advertising, but it's still very good organic growth that Tesla's able to do. And also, part of the reasons why Tesla's not able to exponentially grow is because of the lack of marketing, right? A lot of people don't even know what Tesla can actually do, right? So that is something that Elon Musk has finally agreed to, putting more money, more dollars into marketing and advertising. But if you look at this chart, since its IPO from 2011, there's been many times, many instances where Tesla has not gone anywhere. 2 years, 6-year period, right? So from 2014 all the way through 2019, Tesla went nowhere. And this right here has been a 3-year period where Tesla has literally been flat. It's been down over 40%, 50% from all-time highs of well over $400. And again, it's just been trading just over 240. So we're still down a considerable amount from its all-time highs. However, really, it's the burst of these breakouts that is where the money is made. So this right here, boom, over 880% rally. This right here, almost a 3,000% rally. And I think most investors really just remember this moment here, the S&P 500 inclusion, the short squeeze, Tesla becoming profitable, right? So a lot of things happened here in this entire rally. And what I am expecting for Tesla over the long term, again, this is not a 1 year forecast or a 6 month forecast, but this is more of a multiple year growth cycle forecast where there is expectations for another very similar rally for Tesla because there's a lot of tailwinds at play. One of the big ones, of course, is the rate cuts that we just got from the Federal Reserve, Jerome Powell, a couple days ago. We talked about it in our previous update as well. And what you'll notice is that every time rates go up, it becomes more difficult for consumers to spend, hundreds of thousands of dollars on a vehicle, and their monthly payment is higher, their cost of purchase is higher, and you can pretty much take a look at this chart and you will know exactly how correlated these two things are. So every time, so for example, going back to as far as, let's see here. So I'm going to come over here on this chart, and what we're going to do is we're going to bring back the chart. So you'll notice that, since, let's say, February of 2014 all the way through September of 2019, right over here was about 2019, 2018. Rates kind of peaked at 4.9, almost 5%. They were accelerating since August, September 2014. So as they were going up from 4% all the way up to as much as 5%, Tesla really didn't go anywhere. And as rates started coming down, so December 2018, and they kind of bottomed out around December 2021, Tesla had this huge burst of momentum, and that's exactly where we topped out. That was October, November of 2021, and this right here, October, November of 2021. That's really where rates bottomed out at 3.85%, and then of course we've been slowly and steadily climbing higher. We've really just kind of overshot to the upside as the Federal Reserve embarked on this very aggressive journey of increasing rates almost up to as much as 8%. And in my opinion, again, this is just really an expectation for myself, is that the bottom is already in for Tesla. In other words, this right here, the level that we saw back in December 2022, might have already been the bottom at $102. Then, of course, we rallied back up to $291, almost at $300. We came back down to $137, and that, in my opinion, was already the bottom here on April of 2024. And as interest rates now start to come down, you can see the August just printed 7.76%, and this number is going to continue to roll over depending on how many rate cuts we get from the Federal Reserve. But affordability, car affordability is going to increase now, and especially if you combine that with a lower priced model for Tesla, it's game over for other electric vehicle manufacturers, and I think Tesla is where it's going to be moving forward. So this was the Venn diagram I showed you guys for the Tesla explosion and for further breakouts, which is lower interest rates, a huge tailwind, right? Without a doubt, as the correlation is pretty much there. Lower priced vehicles. So that's another thing that we have to wait and see from Tesla, is what is going to be that bottom pricing for Tesla's new models, cheaper models, more affordable models, and especially targeting countries like India, where there's a huge need for electric vehicles as well. And of course, increasing gas prices. Oil prices are back up, although they are down from 2 to 3 months consecutively in a row. But if gas prices continue to stay elevated, becomes burden on consumers' wallets, well, they're going to look at those savings when it comes to switching to electric vehicle. And that is the Venn diagram where, as it starts to once again play a big role, Tesla's explosion or breakouts are going to be on the radar here. Now, this right here is seasonality. I also wanted to show you some Tesla seasonality here and how Tesla tends to perform. And this is going back as far as like 5 years. We're looking at 2019, 2020, 2021, 2022, and 2023 for different months. And since we are currently in September, 40% of the September months in the last 5 years worth of analysis, we have been higher. So, the probability for us to be green is actually low, because this is percentage of months in which Tesla closed higher than it opened from 2019 to 2023. And September, it is low with the average loss of about 1.7%. October is very similar, 40%, but it's really November. November tends to be a very strong month for Tesla, 80% probability. It's the second highest month for green after July. So July, you'll notice, is 100%. In other words, 100% of the times Tesla is higher in the month of July, but November is about 80%. So that is also incredibly high. That kind of matches June. And again, we've got also elections this year. So depending on who wins the election is going to be dictating where Tesla goes with a lot of those electric vehicles, tax credits, and all those subsidies that the government is also providing for making this adoption accelerated. And 60% for December as well. If you go a little bit further back, pre-2019, once again, you'll notice that seasonality tends to increase as we kind of close out the year. So it goes from about 20% in September. September, as we already know, historically has been one of the worst months for the market, but then it accelerates to 40%, 60%, and 80% in December as well. So that seasonality continues to increase. So there is more potential momentum on the way, on the horizon here, especially when you look at November and December seasonality. Now, the Robotaxi may be something else. Chief Executive Elon Musk has planned to unveil the Robotaxi on October 10th. And they, of course, needed a few more months to allow them to improve the Robotaxi, as well as add in a couple other things for the product unveil. Adam Jonas, Morgan Stanley's high-profile auto analyst, wrote on September 5th that he expects the October 10th Robotaxi event will include a demonstration of the latest iteration of the full self-driving, which would be version 12.5 or later, as well as a demonstration of a fully autonomous Robotaxi, or quote-unquote a cyber cab, driving on a closed, semi-closed course. And Jonas stressed in his analyst note that Tesla currently has a permit for autonomous vehicle testing with a driver, but does not possess a permit for autonomous vehicle testing or deployment without a driver just yet. He also noted that Robotaxi reveal will essentially be very, very important. So investors are contemplating various paths to commercialization and scaling of Tesla's autonomous vehicle technology. They also wrote, it remains an open question if Tesla will go direct to consumer route or with their FSD or autonomous vehicle technology in long run, or it will partner with a leading mobility player like Uber to achieve a more optimal matching of supply and demand for autonomous vehicle trips. As I mentioned, they can go direct to consumer. They can also partner with companies like Uber, Waymo to better, take advantage of an already very large network of vehicles. And again, an algorithm that's already built that's focused on matching both the rider, and of course the driver with each other, right? So Uber, Waymo has already been in this space for a long time. It's just like I can partner with these manufacturers to help us better. In other words, these companies to help us better its algorithm as well. Now, if you took a look at Tesla's cost basis, so we are right now $221 is the average cost basis for Tesla, making 79% of investors currently profitable in this stock. That's actually one of the highest numbers we've seen in a very long time. Most of the times I've kind of seen this under 50% because Tesla was trading below $220s, $200. So, the fact that we're already trading back up to those levels in the 240s, highest level since July, and again, a huge breakout, putting 79% of investors back in the profitable zone. And the good thing is that, it's not like Tesla investors are fed up with the underperformance and they're looking to dump shares as prices go higher, because even if we do continue to move up, it's only going to create this selling pressure from the top, right? Why? Because if investors are holding on to Tesla shares and they're just looking to get out, right? As Tesla moves higher, that supply comes back in and we really just go nowhere. And that's what happened with PayPal for a very long time. PayPal investors got fed up. They just wanted to get out of that stock as soon as it had a nice little bounce. And every time it bounced back higher, we saw that selling pressure come in. And PayPal didn't really go anywhere because of that excessive supply, and we just basically came back down in pricing. So that is, in my opinion, not the case with Tesla, because Tesla investors are in it for the long haul. They're in it for the long term, looking at the 3-year, 5-year, 7-year, 10-year picture for Tesla. That's what they're kind of banking on, is the idea that full self-driving, robotaxis, humanoid robots, everything has a ton of potential for the long term. So we'll see how that materializes, because I think it's really important to understand that that is all the cherry on top, because no investor, no analyst has been able to model that really well. We don't really know to this day how much revenue is FSD going to potentially bring in for Tesla, for robotaxis, right? How is that going to monetize? How much is that going to monetize? We also don't know with the robots that Tesla is building in the manufacturing space, how is that going to, increase productivity for businesses? How cost efficient is that going to be for businesses? How much is it going to sell for? I mean, we have some rough estimates and ideas. Like Elon Musk has been throwing numbers that, $1 trillion worth of revenues from humanoid robots alone. So again, there's a lot of different types of numbers that's been thrown around in different events for Tesla, but nothing has been materialized yet. So I think it's really important to understand there's a lot of untapped potential. And the two words that I've been using for Tesla for the longest time is adoption and execution. Those are the two words that I've been mentioning with every Tesla video. Adoption for the technologies that they are building, and execution with the company's execution. In other words, they are the ones that actually are executing on this adoption, right? If those two things align together, right, that's what makes the company very successful. Adoption, meaning the market needs to validate that. There has to be a need for what they're building, right? If nobody wants a robot, there's no adoption. So there has to be adoption from the market, from consumers. There's a validation of that market. And execution, meaning that Tesla is the company that executes on that adoption. If those two things align, I think we're in for a very, very nice future for Tesla. Now, coming over to the technical analysis. So once this breakout just took place here, my next target is going to be 270 for Tesla. So that's going to be that level where we were back in July of 2024 before we broke down below 240s. And this right here is going to be turned into a support. So given how well Tesla's been performing here inside this sort of uptrend, wouldn't be surprised to see a little bit of a pullback down to 230s again before it makes its next leg up higher, up to as much as $270. But that right there is going to be that next level to keep in mind. However, I still want to point to the fact that we're still well within a context of a downtrend. Lower highs and lower lows are still present. It's not until really we break out above 300 that we are finally going to be taking out some very interesting previous highs. So 3 times I've kind of marked out here, gotten rejected here in the 270s to as much as $300. That's why we've got that area of supply here inside this red rectangle where there's a lot of supply. Again, we're getting knocked down every single time we get up to that level. So if you get a breakout above this, then the next target is going to be 380s and 420s, and we are pretty much off to the races, back up to almost all-time highs. So that's where we are with Tesla. Let me know your thoughts down in the comment section below. Hope you guys enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel if you haven't already. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. Happy investing. I'll see you all in the next video.